Hey Money Magnet, you ready for some price action trading with Uncle? Awesome, have a seat. I'm gonna tell you about what's happened with the SPY and a few other ticker symbols, and then we're gonna identify some levels, and I'll give you some trade ideas that we can possibly play tomorrow in hopes to attract some money for our P&L. Now we can see here that we have this nasty, beautiful, depending on how you're looking at it, this wick on today's candle. Very tiny body with a very long wick. It dropped down to my 618 level intraday. I have to say, today was a good day, Ice Cube, because it wasn't that much traps today. There was one trap, but it didn't really felt like a trap because of how slow or the pacing of the price action. It wasn't too bad. I'd say it was beginner friendly if you're a price action trader, but what happened today, I usually use the 15-30 minute chart. I actually used the 30-minute chart today, but I'm going to talk to you guys about the action on the 15, and we can see I had a 622 level and it broke down on the 15-minute chart right there, circle right there, closed below on the 15-minute chart. That's the trigger to enter puts, and I managed to alert the group. Hopefully I was able to alert the group, but I let everyone know bulls failed to recapture the 5 DMA at the 624s level. The bears, they didn't let the bulls get above that 624 level. This was in the morning. They defended at 624 level. That was around where the 5 DMA was and my fib level. Rejected from there, consolidated for a little bit, and then we finally had that breakdown and it pushed downwards. Hit my 618 level. A nice $4 move. Unless you entered from the resistance, then you probably had more than a $4 move. But it was a nice $4 move. Great for a level-to-level day trade move. And then what happened from there? Well, it bounced, got back above the 620 level, and eventually cleared the 622 level, recaptured that. False breakdown setup at the end of the day smashed the 624 level. So was it the best trading day ever? Not really. Not the best, but it was a pretty awesome trading day. Made a good amount of money, not much traps. The levels work. I'm grateful. So now we move on and look at the daily chart. So because we need to prepare for tomorrow, and to do that we need to look at the context first. What is the context? Well, based on my charts, I know not all of you guys use the 5 daily moving average, but I've been using the 5 daily moving average for many years. If you go check my education section and look at some of my older videos from years ago, I spoke about the power of the 5 daily moving average. I really enjoy using it, but we did recapture the 5 daily moving average today. I tell you, recaptures of the 5 daily moving average are usually bullish. The last time we recaptured the 5 daily moving average, it led to, right here, a new all-time high. Before that, when we recaptured the 5 daily moving average, that was back in late June. Oh my goodness, it led to a big move from the 590s, and eventually we got to new all-time high. That was an incredible move. So we have another situation here where the 5 daily moving average was recaptured. The problem with this is it's not a strong recapture, and we are currently below it. It was a pretty weak recapture. 624 was my fib level. The 5 DMA was at 624.12 cents. We closed at 624.22. So even though that's a weak recapture, I still, based on my trading plan and principles, I still gotta respect it as a recapture. So the plan for tomorrow is pretty straightforward. Keep your eyes on the 624 level. You want to keep your eyes on that. That's going to be the equilibrium level. As of right now, I have to say, with the RSI cooling down, the path of least resistance is kind of looking to the upside. Not gonna lie, we could possibly fill the rest of this triangle pattern to the top, but I could be wrong. But if I am right, price needs to stay above or get above 624. That will put 626 and back to the all-time pivot high around 628. That would be in play. Now if I am wrong, and I don't mind being wrong, as long as the price action can give me direction, give me some clear instructions, I don't mind. But if I am, staying below 624 is a start of being bearish. Why? Because one, it cancels out or invalidate today's recapture, and then also it gets price back below the triangle pattern that I have here. So below 624 and breaking out 622, I would be bearish. With 620 and back to 618 we go. Now not once but twice dip buyers stepped up around that 618 level. Not once but twice we had some wicks there. So that represents strong buying pressure. So I tell you this, there's most likely liquidity below that 618 level, like some stop loss hunting stuff. So the bulls must defend that level at all costs, because if it breaks down, well, one of two things could happen. We either get a false breakdown setup from down there, which would be great for swing longs, or if it's lost, that would be a massive win for the bears. So bears must keep price below 624, break down 622, 620, and especially 618, and turn it back back into resistance. Because if they don't, there's a good chance we go back and set a new record, a new all-time high close. We have a new all-time high pivot high at 627.86, but it's not a close. And if bulls want that new all-time high close, they need to stay above 624 and clear 626 to head to 628 or higher. That would be a breakout. So let's move on to triple Q. Triple Q, look at that ugly handle. Looks like a giant doji. The really long wicks from both ends, barely any body. But here's the interesting part. We finally, for the first time probably ever, closed on the daily chart above 557. Isn't that crazy? The first time ever we close above 557 and we get this little body candle. That's adorable. But I tell you this, we have the context. Now we need to prepare for tomorrow. Whether it's ugly or pretty, that is an official close above 557. So that is the level to watch for tomorrow. If bulls can keep above 557, 559 and 561 or much higher is incoming. But if it is pullback time, the bears will have an opportunity to play or at least set up a false breakout off that 557 level. But either way, they will need to break down 555.5, 554 or lower to send triple Q back to the downside. 552 and 550 or lower. Below 550, Uncle charters would be bear bias on triple Q. So watch that 557 level. Below it, pullback time. Above it, oh, we are going up to new all-time highs. Tesla with the bounce. Wow, incredible bounce. Selling pressure yesterday, buying pressure today. This is why I love being a sheep style trader, because there's big move to the downside, big move to the upside. So much opportunity. There's abundance of opportunity out there. And with Tesla, sky's the limit. Speaking of limits, right now I have resistance at 322 and 323.5. For today's buying pressure to continue into tomorrow, keep in mind the RSI is not even overbought yet. 323.5 must clear to send us to 325, 330, 331.6 or higher. Now if we are going to try to short this, we want that false breakout setup. That means a breakdown of 320.5. That's a fib level. If it breaks down, then we can expect to head back to the downside. 319, 317.5, 316 or lower would be back in play. Here is NVDA. They didn't really go anywhere, but let me tell you, it's still overall bullish, whether you like it or not. And here's what happened. You see that blue line? That was a critical support level. One of my critical support levels. Guess what? It held. So I'm still not seeing any reasons to get bearish on NVDA just yet, at least for the short term, until support levels fail. That I need to see 169 fail still for us to go for the gap fill around 165. And there's plenty of other gaps to the downside. 160. There's a gap around all the way down or 148, 147 area. But it doesn't matter unless we can break down 169 and 165. Otherwise, 171 and 172.5 are resistant. Those levels clear, then we're gonna defy more gravity with NVDA to the moon. Here is coin also trying to go to the moon. It ran into one of my macro level fib levels. That macro level fib level is at 398.6. It's trying to gap above it in the aftermarket now. I'd say if it can be above it tomorrow, then 400 plus incoming. But if it manages to stay below 398.6, it can avoid a breakout. But to me, it won't matter unless it can show strength. And to me, strength comes in the form of breaking down support levels. I do have a support at 395.5, 394, and the 5 DMA is at 391ish as of recording this. So I need to see those levels fail, and then I can favor some more downside. Otherwise, we cleared 398.6 and 400, more upside incoming. And like I always say, last but certainly not least, here is IWM. Looks like dip buyers came in for it as well, but it didn't really recapture any critical levels, just avoided some more downside. So if there is going to be some bullish follow through for tomorrow, because it does look like the dip buyers came through, 221.5 and 223 once again must clear. Those didn't clear yet, but if they do, that is your price action sign that we are heading up. And those levels cleared would also put price back above the 5 DMA. Now you look at my green line, when IWM is bullish, it spends majority of its time, you can see it with your own eyes, above the 5 DMA. So bulls do not want to see IWM below it, because as long as below it, there's a chance that we head down lower, and loss of 220 and 218 would confirm that. Thank you guys so much for watching. You guys are money magnets, and if you are watching my video, it's because you are a master trader. You are a money magnet. Live in the end. Live in the end. Everything you want, it's already yours. It's already yours. It's yours. Believe that, because why not? It's the truth. Peace.